Nike is down 20% at the time of recording this video, after the company reported its earnings last night. The first time Nike was trading for this price was all the way back in 2018, which means that it has now lost 6 years of gains. Nike was also a $175 stock back in 2021, which means that it is now down 60% from its all-time highs. Nike is one of the most well-known brands in the world, and it's pretty incredible to see its stock down so much. I have been asked for my opinion on the stock by dozens of subscribers, so in today's video, I want to explain why Nike's stock is down so much, go through its financials, and answer the question of if Nike's stock is looking attractive today. So with that being said, let's just hop right into the video. And the first thing that I want to do is take a look at Nike's long-term revenue growth. And here we can see that Nike's revenue has been growing nicely for decades, and the revenue is currently sitting right near an all-time high, but it does look like the revenue is not really growing at least over the past about 18 months now. The revenue looks like it is kind of topping out. Now, if we zoom all the way out to 1991, we can see that Nike's revenue has had periods before where it isn't really growing. The first period was back here in 1993, second period was in the tech bubble and then the collapse of the tech bubble, and then in 2008 to about 2010, it looks like Nike's revenue was also declining and not really growing. So at least historically, it seems like Nike's revenue grows when the economy is doing well, but then when there is a recession or some pullback in the overall stock market and maybe consumers are not feeling as wealthy, it looks like Nike's revenue does see some short-term headwinds. And it could be that we are entering one of these periods again because Nike's revenue is clearly topping out right now. Now, the next metric that I want to take a look at is Nike's operating income. And we can see that over the long term, it has been growing, but it is in this pretty significant correction right now from its all-time highs in 2021. If we take a look at Nike's EBITDA, this is the exact same story. Nike's EBITDA is in a pretty strong correction as well. So then I like to head over to the cash flow statements. And if we take a look at Nike's cash flow, we can see that it has been significantly more volatile than its operating income. So when I take a look at this stock and when we are going to be valuing the stock later on in the video, I'm actually going to be using the operating income instead of the cash flow metrics because operating income does seem to be the most consistent metric for Nike. So now let's head over to Nike's KPIs right here. And we can see that its apparel revenue has been kind of flat for about 3 years now. Apparel revenue is not really growing. Footwear revenue is also not really growing that much. At least over the past about 18 months, it looks like it's kind of been just hovering. Nike's equipment revenue has been uptrending though, but this is a smaller portion of the overall business. Converse revenue has also been declining since the first quarter of 2023, and it looks like it's actually declining quite significantly. North America revenue has also been topping out since about the first quarter of 2023. Europe revenue has been in a slight decline, and Greater China revenue has been in a decline since about the second quarter of 2021. Asia Pacific revenue is still slightly uptrending though. So overall, it actually looks like Nike's business has not been performing very well. Its equipment revenue is really the only revenue that has been continuing to uptrend, and it's actually seeing a decline to Converse revenue, and North America revenue has been topping out, which is its largest market by far as well. So then I also went and took a look through Nike's most recent financial reporting that it just reported last night, and I have some screenshots here from the highlights that I found. So for Nike's full fiscal year, revenues were $51.4 billion compared to $51.2 billion in the prior year, only up 1%. Fourth quarter revenues were $12.6 billion, which were actually down 2% year over year for the fourth quarter. Nike direct revenues for the fourth quarter were $5.1 billion, down 8%. And wholesale revenues for the quarter were $7.1 billion, up 5% year over year. So for the full year, Nike's revenue only grew 1%, and for the fourth quarter, it was actually down 2% year over year. So on a year-over-year basis, Nike actually saw its revenue decline still. And this is what I mean. It looks like Nike's revenue has been topping out for about 18 months now, and now it looks like it is actually starting to decline. And this is kind of the trend of Nike's business whenever consumers seem like they are heading into a recession. Again, like in 1999 and in 2008, we saw that Nike's revenue did start to decline when recession started. Now, if we head on to the next screenshot, we can see that for the fourth quarter, North America revenue was down 1%, Europe revenue was down 2%, Greater China revenue was up 3%, and Asia Pacific revenue was up 1%. Converse revenue was also down 18%, and in total, Nike's revenues did decline by 2%. Footwear revenue was down 4%, and apparel revenue was up 3%. So this is kind of a mixed bag right here, but overall, we can see that Nike's revenue did decline by 2% in the fourth quarter year over year. Now let's take a look at Nike's actual income statement. So right here, we can see that revenue again was down 2%. However, operating income was $1.7 billion for the 3 months for its last 3 months in its fiscal year, which is up 39% year over year. For the full year, Nike produced $6.7 billion in operating income, which was up 8% year over year. So despite Nike not really growing its revenue for the full year of 2024, it did manage to expand its operating income by 8% through margin expansion. And the operating income again is at $6.7 billion. And keep this number in mind because we are going to be using it when we value Nike's stock here shortly. But first, I want to go through Nike's financial outlook right here. So the business does say that it is in a comeback and that a comeback at this scale is going to take time. Now the company updated its guidance as well, and for fiscal 2025, they are expecting revenue to be down mid-single digits, with the first half down high single digits. So they are expecting revenue to decline in 2025. Now for the first quarter of its fiscal 2025 year, Nike is expecting its revenue to be down approximately 10% year over year. So Nike is expecting a pretty significant hit to its overall revenue, and I do think that this is why the stock is down so much today. Because the business is very clearly saying that it is facing significant headwinds right now, and its revenue is actually projected to decline in 2025, which is not a great thing to see. So now if we head back over to Stock Unlock, we can see that Nike is a $117.5 billion company today. And again, remember the company did produce $6.7 billion in trailing 12 months operating income now, which ultimately means that Nike is selling for a price to operating income of about 17.54 today. Now, what we can do is go and take a look at Nike's historical average price to operating income ratio to see if it is trading below its averages right now. And here we can see that over the past decade, Nike's average price to operating income has been about 27.6. So it is actually trading significantly below its historical average price to operating income. In fact, back here in the stock market crash of 2020, Nike's price to operating income was 21.1, which means that the business's price to operating income today is about 20% below where it was trading during the stock market crash of 2020. So it seems like the market is very bearish towards Nike stock right now. And relative to operating income, you can make a strong argument that this stock is looking cheap right now. However, Nike's business seems like it is facing some serious headwinds, with first quarter revenue in 2025 projected to decline double digits by 10% year over year. Now also, back here in 2020 and really at the start of 2021, Nike's business was trading for roughly 60 times operating income. And even right here at the end of 2021, it was trading for 38 times operating income. Now, I have said this before on my channel, and during 2021, and really even up until recently, Nike's business, in my opinion, was pretty significantly overvalued. I don't think that Nike stock was ever actually truly worth $175. So if you are taking a look at the 60% correction that Nike stock is in right now from its all-time highs, you just have to remember and be aware that Nike stock was actually never even worth $175. I do think that the market was overhyping this stock and overvaluing this stock at one point, and now the market today is finally maybe undervaluing Nike's stock, at least if you take a look at how the market has historically valued this stock on its operating income. But I don't see any reason why Nike stock should have traded for 38 times operating income, and I do think that the stock historically was quite overvalued. So next, what I would like to do is a discounted cash flow calculation on Nike stock today, and we are going to be using its operating income metric. Now, over the past 5 years, Nike has compounded its operating income at about 4.6% annually, and bought back about 1% of its shares annually as well. It also grew its dividend by 11% annually, and it did trade for a 33 price to operating income on average over the past 5 years specifically. But remember, the stock was also quite significantly overvalued in 2020 and in 2021, so this number is being inflated, at least in my own opinion. So I entered in a 20 price to operating income, which I do think is much more fair for this business. And it does mean a slight multiple expansion over the next 5 years because, again, the stock is trading for about 17 times operating income today. So basically, if Nike can actually continue to grow its operating income by 4.6% annually over the next 5 years, buy back 1% of its shares, grow its dividend by 11%, and trade for that 20 price to operating income, then the stock could deliver a compounded annual return of about 11% from its share price today, which is a market-beating return. However, you do have to remember that this DCF right here does factor in roughly 4.6% annual operating income growth, and Nike is projecting 10% revenue declines in the first quarter of 2025 and about a 5% decline to revenue in 2025 as well. So if we knock this number down slightly to about 3% to make it a little bit more conservative, and we also say that the dividend may grow by about 5% annually, and the stock will maintain that 20 price to operating income, then the stock could deliver a compounded annual growth rate of about 9.3% annually going forward, which is still a decent return, but it's not really a market-beating return. So basically what it looks like, in my opinion, is Nike kind of has to maintain that higher price to operating income ratio and still manage to grow its operating income overall by at least slight single digits going forward to actually be worth fair value today and produce at least market-beating returns or returns in line with the market over the next 5 years. Now, personally, I have no idea if Nike is going to be able to do this. It seems like its brand is really seeing a headwind right now and some struggles. What's also interesting is another stock that I follow here on my channel, which is Lululemon, is actually seeing its revenue still grow by 16% year over year and is projecting about 10% growth for the next year in its fiscal year. So it seems like Lululemon, which is another consumer brand, is actually taking market share from Nike because that business is still growing quite strong and at double-digit growth rates. And what's also interesting is Lululemon is trading for a price to operating income of about 18.5 today. So after Nike's most recent share price fall, it is slightly more expensive than Nike, but Lululemon, at least in this market environment, seems like it is actually the stronger business, and it is growing significantly quicker than Nike and actually still projecting growth. So if I was interested in an apparel company right now or a consumer brand, I think that I would be much more interested in Lululemon because that stock is basically the same price in terms of operating income, but it is projecting significantly more growth and it's not actually projecting a decline to its business. But in general, I do not invest in the consumer brands industry because I just do not understand the moats in this industry. Like, I don't understand why someone is going to buy Nike versus Lululemon 10 years out into the future. Or is there going to be some new consumer brand that comes up and then everyone wants to buy that brand? Is Nike going to screw up its consumer brand image? Are people not going to want to buy it in 5 years? Is Lululemon going to continue taking market share? And then is some other business going to come up and take market share from Lululemon due to consumer trends? Like, I just don't know. I don't know how to predict consumer trends over the long term. So all of these businesses, in my opinion, and based on my own investing, they're not buys for me because I cannot identify the moats and I don't know what the moats are behind these businesses. Like, again, Nike is supposed to be one of the strongest brands in the world. And at least right now, it seems like it is getting beaten by smaller brands like Lululemon. And it seems like it is actually losing some market share. And that's not something that I would have been able to predict. And it's actually kind of surprising to me. So again, these are out of my circle of competence. I don't know how to predict the long-term trends of the apparel industry and these consumer brands. So for me, I stay away from all of them. However, with that being said, there is an argument that Nike stock is looking quite attractive today and could deliver market-beating returns if the company can turn around the business, get that operating income growing again, and if it can maintain at least a 20 price to operating income ratio. So that's my opinion on the stock today. It's not a buy for me. I do still think that it is actually a little bit more on the expensive end. I don't think that it is offering a massive margin of safety today. But that is just my opinion, and I would love to hear what you guys think down in the comment section below. And that is going to wrap up the video for today, everyone. So if you did enjoy this video, then please remember to leave a like on it, as it really does help out my channel. And if you're new here and you want to see more stock market related content like this, then please consider subscribing to the channel as well. But that's going to wrap up the video for today, everyone. So thank you so much for watching. As always, I truly do appreciate it, and I really hope to see you all again in my next one.